She made $41 million in 3 years trading options. If you don't know who I'm talking about, let's see together how Karen the Supertrader managed to generate that much revenue. And of course, we'll talk about all the controversies that happened to her. I'll also give my opinion on the subject. I have some ideas about what happened, but we'll see all of this together. So let's get into it.
So I've been waiting for this segment for like a year since we started the show. I'm Tom, she's Vanetta, he's Tony, and
he has told me about you for years, for years and years.
Well, so let me introduce Karen. And the only reason I'm not giving out last names is because I just don't want people reaching out to her, because I know respecting your privacy, and also because
you want to keep it for yourself. We got it. It's not a big deal. Listen, I understand.
Thank you.
You're welcome.
But I'm the one that's excited to be here.
Beautiful.
I mean, wow, this is very impressive.
Well, I mean, we have known each other indirectly for probably 10 years, meaning that she knew me before I knew her. And it wasn't until some point probably about 3-4 years ago where somebody said to me, "Hey, who is this woman?" Okay,
And why hadn't she run yet?
No, and look at the risk that she has on, that kind of thing. And we're like, okay, we better figure out who this person is. So let me tell you the story, because this is great. And thank you so much for coming in. And this is a story I've been wanting to do for a ridiculous amount of time. And you fill in the blanks for us.
Well, I'm learning a lot. I didn't know you looked at what we were doing.
We don't, until it pops up on a radar screen.
Okay.
You are you were the either CFO, accountant for a small business, and you guys were brick, right? It was
Brick and mining.
Brick and mining.
Brick and mining.
Nothing to do with the financial side.
No.
And I always have this saying. I have this crazy saying, which is, next thing you know, you're 50. Okay, which means most people, Karen, they start.
So we're going to talk about your age now, Karen.
Okay,
As we're going with this. I'm glad you're going to be here about 20 minutes.
Like I said, weight's off limit. But we'll talk about my age.
People, like, one of my pet peeves is that nobody gets involved in investing when they're young, and they go through. They spend 10 years, 20 years, whatever it is, and next thing you know, they wake up and they're like, "Wow, I've accumulated some money, but I don't really know what to do with it."
I think that really changed with now the current generation, where we tend to be more interested in investing our money right from the start. I mean, I definitely put myself in that category. I started being interested in, investing, let's say, in stocks and everything when I was like in high school. So obviously extremely young, and I had no capital whatsoever, obviously, to invest because I was in high school. But I think that changed now because the stock market just became so accessible to anyone. Literally, if you have like a phone, you can download an app and then you can start opening an account in a few minutes. Honestly, it's very, very accessible now.
Your money's being managed by an advisor at Merrill, and let's just say around $100,000 to be fair. And she has some liquid assets outside of that. She attends a preview. One of her friends drags her to a preview for Investals.
Yes.
That's pretty fair, right?
That's correct.
And you went kicking and screaming.
And are you crazy? Why would we want to do this? But also, just around that time, I remember someone saying, no one is ever going to manage your money and watch your money as well as you are.
That's very true. That's something that I wholeheartedly agree with. And I genuinely think, except if you have like, let's say 30 billion and you want to manage that money, maybe it's better if someone invested, because we're talking about huge amounts of money. But when we're talking about the everyday person, and I definitely put myself in that category too, like I definitely think that there's no one else better than you that knows what you want to do with your money, which type of risk you want to take, how far do you want to go in the risk to generate returns. Because if someone, let's say, invests your money, let's say they invest in the SPY, and then they're going to also invest in Apple. Well, Apple is the biggest component of the SPY. Maybe that's something that you wouldn't be comfortable with if you were doing it yourself, but someone else is doing it for you. And nowadays, looking at how accessible, as I said before, looking at how accessible the markets are, you can really build a simple portfolio for yourself where you're fine with the risk, where you feel comfortable, and you're going to have like decent returns without paying any fee, without paying anyone anything.
So that rang true to me. Because over the years, I'd go up, go down. My asset value would increase, decrease, and I didn't feel like I was making any progress. So she and I had talked about trying to do something in business together. So we went to a free Invest Tools seminar, And in that seminar, they were offering what they call a PhD program, and it was $22,000.
$22,000.
Yes. And she said, "Oh, let's do this." And I said, "Are you crazy?" But she talked me into it. And together, we took that PhD program that took about 1.5 years to complete.
I don't know how accessible, information was when she actually took it, but 22 grand for a program that is basically going to teach you how to sell puts and how to sell calls. Even if it was worth 22 grand, that'd be a huge expensive price just to know how to sell puts and calls. Like that information, at least now you can really find it for free. I don't know if it was really free, if you could find it as easily as now before then, like when she was actually taking that seminar. But like, I still think like 22 grand, I mean, that's a huge expensive price for not much like return on investment, in my opinion. But let's see what she has to say.
It was pretty much about fundamentals and buying stock, selling stock, and basic technical analysis, right?
Covered calls, just all the basics. How to read a graph, how to do analysis, phase 1, phase 2 analysis, looking at a balance sheet, looking at an income statement, how to read what a MACD was. What
green and red arrows.
Green. All you had to do was look for 3 green arrows or 3 red arrows, and you were going to be rich.
Well, that definitely wasn't worth it. Then if it was 22 grand for this, then it definitely wasn't worth it.
I'm really a 10-year overnight success. Because it took a lot of work. It took a lot of study. It took a lot of doing things incorrectly. But what that program did was it opened doors. It piqued my curiosity to want to learn more. I tried a whole variety of strategies. I thought I was going to be a real technical trader because I have an accounting and math background. So I had 12 or 14 charts I was following in technical analysis. And I did that for a few years and had some successes and more failures than success. But I learned from the failures. That's the important thing, is not to give up, not to look at, I have failed at this. I can't do this. No, what you've done is gotten closer to a success, because every time I failed, I learned something that made me a better trader and a better trader and a better trader that got me to where I am today.
So
look, I don't want to go too much into the motivational speaking, whatever, but I would tend to agree that obviously when I started I went into technical analysis directly, like I was the perfect person to scam. If there was one person to scam, like if there was a stereotype of the person that would buy anything that you would say because they would promise like riches and whatever, I would be that person. I bought programs about technical analysis. I bought I did a lot of wrong things, but it's true that it always got me closer to something better without going too much into motivational BS. Like I think it's important to continue searching and always trying to question your own beliefs. Like when I was doing technical analysis, I was really trying to question myself. How do I know that this is going to work? Okay, for example, technical analysis, I could try to backtest strategies that rely on technical analysis so I can know if it's actually a profitable strategy or if it's not. And it's going to answer the questions pretty, it's pretty straightforward if you backtest it. So I learned how to code. I started backtesting those technical analysis strategies. If I hadn't had all those failures in terms of technical analysis, in terms of strategies that didn't work, how many times, did I lose money, stuff like this in very stupid ways, I would have never appreciated the power of options. And when you know how to understand your risk and how to actually use it, I would have never appreciated like options the same way as if I had directly started with it. Because I think I really needed all those failures to actually understand, appreciate that, okay, now when it relies actually on statistics, which is exactly the point of options, is mostly probabilities, well, now you see why it works.
So here's where the story gets amazing. So from 2007, you move the money over, and now you've got the 100,000, let's just say approximately, and you start trading. And at this point, you've also changed your trading style a little bit. You're confident because you're focusing more on strategies than you are on anything else, and you're believing in a little bit different approach, the short volatility, some short premium, and you turn the $100,000. And remember, 2007 was the year that volatility got annihilated down to like 10%. 2007 was the summer of 2008 is when the market kind of topped out, and So from 2007 to 2008, you turn your 100,000 into 150,000.
150,000.
Okay, so it's a 50% return, and you
50%,
support
yeah.
yourself.
Yes, and I've moved into options at that point. Decide stocks are just too difficult to pick. No matter how much work you do, there's such a good chance you're going to be wrong. And moving,
We say it's about 50%.
it's about 50. and moving more in the direction of non-directional plays, really starting to tap into that. Realizing if I buy a call, I only make money if the market goes up. And I only make money if it goes up a certain percentage because you have to cover the time value loss.
The break-even point, right.
So that's got to be a better way than this. So that was just starting to evolve at that point.
So all of it clicks. So let's just say some point in early 2008. Now remember, 2008, the end of 2008 is the economic meltdown. It's the debacle in the markets. It's the worst time ever to be short premium and to start getting involved in this. So, but your proof of concept works, and you go from 100 to 150,000. People that you're friends with are watching you. They decide, hey, you know what? I really like what you're doing, and they also come on board with you. So you raise a little bit of money, intentionally, non-intentionally, whatever it is, and you build your account size up to more than a few $100,000. Let's say in the total, you start with like in 2008, maybe $600,000 or $700,000.
Right.
And so here's the amazing story, because I'm going to fast forward now.
Okay.
By the way, going from that money, what she had to 100 grand to 600-700 grand. I mean, now we're talking about proper money. It's not like just an individual's money, especially if she raised money directly. I mean, now we start talking about real numbers, like proper accounts. And if, as it just happened in 2008, if there's a crash that comes, that's going to hurt properly. And so that's going to be interesting how she managed that.
Fast forward through all the market crash, the economic meltdown, blah, blah, blah. We go all the way to 2011, and somehow between 2008, because this is the
Didn't talk about the 2008 crash, apparently.
remarkable piece of story, to 2011, you make $41 million.
Correct.
How are you not a Lifetime movie? I would watch this. This is amazing.
Okay, so and I skipped through 3 years of time, but Tony and I have done this for, at this point, by the same years you're talking about, a lot of years. We're in our mid-20s of doing this, and we've seen a lot of the greatest traders in the world, and
Sure.
but on a professional level. I had never seen a customer before have the kind of, now at the same time you raised additional capital came in. So you went from essentially 100,000 to 700,000 to about 80 some odd million with money that they raised and things like that.
Right.
But 41 million of it are profits.
Yes.
And
Insane. Like $41 million, it's a lot of money. I mean, I don't think we fully realize what it means. I'm really curious to hear how she actually made that money, like, because I believe, I'm almost sure she went for the SPX. Like, I'm almost sure that she probably sold a lot of puts on the SPX. I'm just amazed of, if she made $41 million of profit when she was making a trade, how many contracts was she actually selling? Because that must have been a huge trades that she was placing.
in a period of time where I think it was a difficult market, I don't think it was a difficult market. It was a difficult market. Okay.
The worst.
So what the hell happened? Like, I mean, Karen, and we watched it kind of from the sidelines because you were a customer. And when I say we watched it, we would monitor risk like we do every customer. We weren't watching what you do. But you were a phenom. And you weren't exactly like, what I'm saying is most phenoms are, they're 18-year-old phenoms being drafted out of high school.
Right, or they're 50 pounds heavier than you, and
Whatever it is.
Yeah.
You don't fit the prototypical
But I got a few phone calls from you where you said, "Are you sure you're watching this?" Yes, we're watching.
I have a very high tolerance for risk, and you were a bigger man than I was many times. That's all I'm going to say.
I know that she's had a lot of controversies after. I think it wasn't at that time, but I think it was still later, like in 2017, I think, or I don't really remember. Let me know in the comment section if you really remember when it was. But obviously they have watched her taking those trades. They have monitored her risk, and they were there. They were actually witnessing this happening in real time. So, I don't think that, I know that there are a lot of people that say that she's a fraud, that she hasn't made the money that she made. I genuinely think that she made the money that she says she made. I just think that where there has been issues, it's more on the how she was talking about, for example, postponing losses when it comes to rolling and everything. I think it's more in those mechanics that she actually got in trouble. But I think, at least at the beginning, so far, when she actually did that interview, I genuinely think that she actually made $41 million. What do you think happened? Let me know in the comment section what you think.
But Karen, because people are wondering, how did you do it? That's what people want to know. How did you do it?
Well, a couple of things. First of all, like I said earlier, really stopped trading stocks. That got us out of the guessing game of, is it going to go up, is it going to go down, and got us out of the earnings season. I really when we stopped playing the earnings game. We got strictly into options in stocks, slowly moved over to the indexes. As we moved over to the indexes, then we could play more safely, and then we started strictly shorting indexes.
Shorting premium.
Shorting premium, shorting premium.
Okay.
So as we've built this strategy, it's a very simple strategy. So one area that's improved what we've done is gotten simpler and simpler and simpler. We gave up a lot of the technical studies. We watch price and volume, our two main items. We have Bollinger Bands on our charts, but we watch the charts, we watch the movement, and we trade very short. And we're very nimble. So we work off theta, and we're just in and out of the market within about 56 days is about as long as we'll venture out. And we keep pulling that in shorter and shorter and turning these things around, but doing it in a very conservative way, trying to stay safe in all of our positions. My philosophy is, once you give me the money, you're not getting it back. So once that premium comes in, we have strategies in place where we do not give the money back. So very rarely, one of the things that makes us successful is the way we manage the account. We rarely lose in a position. Right? It's a rare thing that we lose in a position.
So it means that she's basically selling very far out the money puts. Like that's what I understand that she's doing. After that, the problem when you sell very far out the money puts is that, yes, okay, the number of losses that you're going to have is probably going to be like 1% of the time. But when you have that loss, it's going to wipe you out like completely. It's going to be brutal. Let's say that you win 99% of the time. When you win, you make $1. But then that 1% of the time when you lose $1,000. Well, if you lose $1,000 every time you lose, even if it happens only once out of 100, you're going to be in a loss overall. That's a bit the danger that you have when you sell very far out the money puts. You need to take into account what will be my loss if it goes against me, because it will go against you at some point. That's a fact. There is no question that there'll be other down moves, that there'll be other crashes. That's a fact. That's for sure that it will happen. The question is, how will you handle those? How bad of a loss will it be when you'll find yourself in that position?
It's a straight probability game. So you're going outside, like to what level? Because we teach a lot of different, when we're doing short premium, more like the way you trade, which is kind of wide index strangles, right? That would be the closest, like if we were plotting it, that would be what it looks like on a plot. You told me yesterday, you stick to three different indexes primarily, the S&Ps,
SPX, RUT, and NDX.
Okay, so the three largest. And you have I'm guessing that your tendency is to go how far, what is, to get to the break-even point or to get to the probability of expiring inside the number, is it 80%, 75%, 85%? Like you're inside of what level?
We're working more of in the, now it's called probability of being in the money.
Right.
around 5%. We're putting
So you're
positions
at
on
the
around 5%.
two standard deviation move. Okay. So
She's selling those 5 delta puts. Obviously, she has 95% probability of being right. That's basically right from the start. She has that probability of profit when she opens the trade. So of course, it's normal that she has very, very few losing trades. It makes sense because it's just what you would expect from the probabilities.
So you're basically at a 2 standard deviation move going out about 60 days.
At the most.
At the
Yes.
most, 56
Yes.
days or
Yes.
whatever you said. So you're at the far ends. You're at the far ends of the curve. You're essentially the same place where the brokerage firms are at. When we monitor risk. So you've been doing this now. So you've had some. Let's talk about some of the market moves during that period. I mean, remember, early 2009 was hairy. And then you had the flash crash
In 2010.
which was May 6th of 2010, which had to be nerve-wracking for you guys.
It was very nerve-wracking. I was practicing my Spanish that day because I thought I would be moving to Mexico very soon. Fortunately, we survived that.
And so you've had some, I mean, it's not like you haven't been tested. In fairness, you've been tested.
Yes, we've been strongly tested.
But I looked at your performance, and the number of drawdowns is very much consistent with your probability of success. And I think that that's the hardest thing for individual investors to really understand is if you go out, let's say to that 95% chance of going in the money, which is the inverse of that is your probability of success. And if you look at your drawdowns are amazingly consistent with that probability of success. So you're talking somewhere between 5 and 10% of the time you'll have a drawdown, which based on your schedule, you're probably talking about 1 to 2 drawdowns a year, which is consistent with your strategy. And it's amazing how those numbers play out.
work.
Yeah.
That's the thing, and personally it's true, like that amazed me when I started trading options, is that if you, for example, sell an option that has a probability of profit of 90%, you will have 90% of your trades being winners. As I said, it won't say that you'll make money in the end, but that will be what you will have in the end. And it's true, it's quite crazy when you actually experience probabilities in real life, when you actually see them play out in real life. That's very impressive. So I absolutely agree. That's for me what shocked me the most when I started trading options, is that you could choose the odds that you would like to have, especially when you sell options. If you want to be right 50% of the time, you can. 60, you can. I mean, whatever probability of profit you want to have, you absolutely can.
Last year, we have 2 funds. One fund had 0 drawdowns, and the other one had 1.
That's consistent with the probabilities you're going to. Now, one of the things that you're probably starting to discover now is that the more money you make, the harder it's to make money.
We're
You're
not
close.
quite there yet.
Yeah, you're close.
I've thought about it.
I would love to have that problem. Unfortunately, I clearly don't have this problem, like not at all, but I wish I had.
We're still at the point where as the money flows in, we're still successful just increasing the number of contracts that we trade in a position. So it hasn't become difficult.
It's amazing how liquid the markets are, aren't they?
It is.
I think there's a couple takeaways from this that are so exciting for us. One is that you're proof that anybody can do this, which is awesome. And I mean, I'm not saying it like I'm not trying to make this into. I'm not trying to say what you did isn't amazing, but you are proof that anybody can do this.
Yes.
And you don't have to be, I mean, we started when Tony was 20 years old. I mean, I was 22 or whatever, or he was 19. I was 22. We had nothing to lose. You were in a very different position because if this didn't work, I mean, it's not as easy to recover when you're not 21 or 22 years old. And then the other piece to it is the hard work that it took. Like, it really paid off. It was unbelievable. But were you confident all along that this is what was going to happen?
No, this has been an amazing surprise. But through those years, it took a lot of discipline. I came home every day after work and would sit down and apply like at least 1 hour of just concentrated study. I did that night after night after night. So that's what I see the most of is people that get involved in this think it's going to be easy and it's going to be quick, and it's not. But if you're dedicated and study and practice and learn your craft, there is a a great payoff.
That's for sure. I mean, exactly what she said. Me, I had a lot of doubt that it was going to work out. And, the thing is, you never really finish because it's a constant battle with the markets. You're always trying to stay consistent, stay disciplined. So you're never really done. But I had a ton of doubts. I had a ton of doubts, like thinking, was it going to work? Am I going to actually turn the corner? Am I going to be able to be consistent in my results? Like, that was a constant grind. And I agree with Tom when he says that anyone can actually take responsibility and actually start trading options. It's really doable now, and anyone can do it. You don't need to have a PhD in math. Like, an understanding of statistics is definitely a plus, that's for sure. But that's, you can learn it even if you don't know it. And you don't even have to make millions. That's the thing that people don't understand. You don't have to make millions to, like, actually be good at this. If you have, let's say, like a 20 grand account and, you make your 20% every year, I mean, that's amazing. You're doing it by yourself. You learn a craft, you learn a skill, and you're practicing that skill. You choose your risk and you really control this, compared to someone who would just invest their money into stocks that don't have any control on reducing cost basis and all those different concepts. When you trade options, you have control over this. So your probability of actually making money overall, when you know that craft, when you know that skill, is a lot better. It's a lot bigger than someone who just invests in stocks. And that's what people don't understand. And you don't have to go shoot for the moon. You can just, like, honestly manage your account, do it safely, do it, like, intelligently, and you will be good. You will make it
down the road. That is something I've learned over time, is to be patient and really work on the emotional process, because greed and fear are very strong emotional activators in this, and it'll make you do stupid things. Mm-hmm. So you really need to build the confidence and rely on that confidence, and look at what you're dealing with as, how am I going to manage this? Not the, oh my word, the market's falling. Okay, the market's falling. How can I take advantage of this? What happened with me is I stepped back and started seeing the big picture. I got my mind out of the minutia and reading charts and ticking this off and ticking that off, and just pulled back and said, how can I manage this looking at the big picture? What is this telling me? And I simplified it, and the more I simplified it and the more I looked at the big picture, the more successful we were.
Preach the same thing. I wish this show was around then, because we would have shortened your time frame. But it's crazy how, like, you probably thought it was the worst $22,000 you ever spent. And I mean, and she went to North Carolina and Wake Forest. I mean, she has for graduate degree. I mean, you probably thought it was the worst $22,000 ever. And then in the end, that level of engagement, what got you excited, that first preview speaker, whatever it is, this is what happens. That's why there's so much value in engagement, and you can't discount that.
No.
About what she said about, being able to see the big picture, how you can take advantage of a falling market. Remember that, to be a bit more practical, remember that anything she's saying right now is only doable if you focus on trading small at first. The reason I'm saying this is that if you trade too big and then the market falls, you're going to wipe out your account and you won't be able to take advantage of, for example, falling markets and stuff like this. And really, trading small is the best protection you can do for yourself. If you have an account and you're selling options, don't sell options. Don't go above 25% of your buying power usage. You probably don't need this to generate good returns anyway. If you go above this, you'll probably generate more returns, but you also put yourself at a bigger risk if there is a drawdown, if there is a crash that happens. So honestly, when you're in that learning phase, really focus on trading small, understand the mechanics. How does an option work? How does assignment work? What does it do if I sell an option? This type of things. And, then later on, you can see if the size is good enough for you, if you want it bigger, if you want it smaller. But first, just trade small. That's the most important thing. Small word to finish this. Like, of course, I'm aware that she's had a lot of controversy. I think the problem came from, like, rolling options and stuff like this. I think it genuinely came from there, because you're basically taking a loss, but then you receive a bigger credit, so it can cover basically that loss. Depending on how you want to turn it, that can be the story that you can say. And I think that's what happened, and she got in trouble for that, because she didn't really report those realized losses when she was rolling her trades. That's my hypothesis. Maybe I'm wrong. Let me know what you think in the comment section but overall, I think she really made the money that they said that she made. She was being monitored, her risk was being monitored, and I think she really made a ton of money. I think it just got out of hand at some point when she was having some drawdowns and she had a lot of investors. But I think that's an extreme example of what can be done in terms of what can you do when you know how to trade options. Obviously, not everyone will achieve this, but that's still quite interesting to know how someone like her trades. Personally, her way of trading doesn't suit me at all. I think that selling very far out the money puts is a sure way to collect pennies in front of a steamroller, as we say usually when we sell options. I tend to sell puts, but closer to the out the money strike, around the 25 delta, if you know what I'm referring to. That usually brings me more money per trade, and when I have a loss, I can cover it better. So that's why I'd rather go to the closer out the money strikes, but still interesting to know how she trades. Let me know what you thought about this reaction video in the comment section. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.